Hey, what's up YouTube? Welcome back to the channel Trading Futures Live, where we trade futures live in front of the camera every single day. We show you our winners, we show you our losers. We try and be as transparent as possible. That being said, let's go ahead and get right into it. Trading is inherently risky and can result in the loss of capital. So please, do not copy any of our trades. Do not take any of our trades. We're here for educational purposes only. So yeah, let's get right into it. We already had our pre-market analysis at 9 a.m. We had core PCE price index month over month, came in better than expected, potentially signaling some dovishness from the Fed. And so the markets spiked up on that news. We do have Fed Chair Powell speaking at 10 a.m., so I'm going to be very overly patient until then. Yeah, that's pretty much all I can say about that. We're gonna need to sit on our hands for a good portion of this morning, I think. It's gonna be pretty difficult for me to get into something. Maybe able to get into a long because price is pulling back right now, and if it holds above where it is, but with Powell speaking at 10 a.m., I kind of expect it to chop for the next 30 minutes. Not really go too far. We do have some decent news next week, especially non-farm payroll on Friday. Some other payroll from ADP on Wednesday. Consumer confidence on Tuesday. We do have absolutely nothing on Monday, though. Yeah, really what everyone's waiting for. 10 a.m. Fed Chair Powell speaking. That's big news. I forgot to go through the earnings, but there is no earnings. There was Jinko Solar this morning, so no major earnings today. And if we take a look at the markets overnight, we've got a little over a minute left till the open, a minute 40. Price shot up in this first 15 minutes of the news, but completely retraced, and then spent the next 30 minutes going straight up, but has since pulled back to yesterday's highs and yesterday's close, basically. The Dow's holding the strongest right now, up above, but the rest of them have all pulled back to, at the very least, the highs from yesterday. And so, really, that's what I'm going to be looking at is, does it hold above? And if it holds above these levels, then we are certainly going to be trying to get long. If it breaks back below and holds below, we're going to be looking to get short. And that's my two if-then scenarios right now. Basically, on any one of these four indexes that you may want to trade, that's really going to be it. We take a look at the dollar dropping hard with that news. And so that is bullish for the market. VIX is also coming back down as some bullish, as a sign of bullish sentiment for the market. Broke yesterday's lows and is holding below that low. I do want to take a look at this dollar on a higher time frame, though. Let's go take a look at a 60 and see where it's at. No, let's go. Well, let's open this up. It's already breaking this rally, base rally, so this is where it took off from. So we do have some demand down here that it did take off from this day. So I'm going to bring these levels. I can leave that one up there. Let's just add new levels. I don't really mark out levels here on... And really, after that, I mean, if it breaks through that, it's got these highs, it's got this rally-based rally. I mean, it could find some demand here, but it can also find it down to these highs. So, yeah, if it breaks through this demand here, it can drop quite a bit all the way to 107, the entire rest of the dollar. From 108 all the way down to 107, so need to keep an eye on that. It's pushing hard into that zone that I literally just drew, and it wasn't very close to. So we're going to watch these on the 15-minute. Let's go back. We are in there right now. So we're going to want to keep an eye. Does dollar get rejected off of here and shoot back up, in which case that would be some bearish sentiment for us in the markets. We are open. Still continuing to come down, but gonna want to see, do we get rejected? If I get a clean price action, especially early in this 30 minutes, I may try and get long, but that's going to be about it until the news. How's everyone doing this morning? All right, we have 4,200 here. Basically, the highs from the overnight, the highs from yesterday. This 4,200 is kind of the line in the sand. Do we break down, retest, get rejected off? Or are we just coming down to retest where it left from to break back up? Let me do it on a 15-minute. All right, so are we breaking down here, retest, come down, or are we breaking down and we're going to break back through, in which case we'll be long. Those are basically my only two if-then statements right now. Yes, sir. Waiting for Mr. Powell to speak. Yeah. 41.95. Yeah, that's where it took off from. And to me, if it holds below this 4,200, I'll be looking to get short. In fact, I don't even want this retest to be that high. All right, I just want to see it hold below this zone, basically, to get short. Or do we break back above? And it's going to be pretty difficult to get into something before Powell speaks. Gonna need to work on sitting on our hands today, boys. This can also certainly just chop around in this 15-point range, 10 or 15-point range, maybe 20 points for the next 30 minutes. So if you do happen to get in before him speaking at 10 a.m., you need to make sure that you're in a very good location. You don't want to get in the middle of nowhere expecting it to make it to the extremes. But let's say you want to maybe short. Okay, well, if it comes back to these highs and gives you a rejection off, okay, good location from the high. You want to get long, it comes back down to here, the overnight low, and you say, I want to get long, okay, good location. With where you can get out of this trade, not expecting it to go all the way back up to the high. But if you get in long here in the middle of the curve, in the middle of the range from this low to this high, it has to get to the extreme for you to at least even be able to scale out. So if you are going to take a trade right now, it needs to be fantastic location. It's something that you should always consider when taking a trade. It's why I was quick to move my stop loss yesterday in a short that I took after we got off of the live session. Let's see if we can roll back and take a look at that. So we broke down. I missed the breakdown yesterday. When it pulled back, it did have a high volume. I had a level here with high volume on a 2-minute chart that I liked. And so I got in short, but I got in the middle of this range from the low to the high. And so having to at least scale out of the trade before these lows, I was very quick to move my stop to break even, which eventually I did get stopped out break even. Had a push down and another push down, but my target was very near these lows here. And so on this push down, I moved my stop to break even because, again, I wasn't in a great location. If I would have gotten in up here, I wouldn't have even had to worry about that. But location is very, very, very important. Not even very low volume today. I mean, that's below 20,000, and for me, below 25 is low volume. Even yesterday was low volume and at 22, and we're well below that. So very low volume. I'm going to say really just waiting on Powell. Kind of surprising that low volume with the news at 8:30. That there wasn't more action because of the breakout above. But I guess because we opened back inside of yesterday's range, basically. The market was tame. Because we essentially kind of opened up flat with yesterday. Advanced decline opening up at the zero line, basically. Tick charts opened up slightly, but not in any sort of extreme territory. And kind of hanging out around the zero line, but mostly above the zero line. And so going to be pretty difficult to get into anything right now. There's no sentiment in either direction. We're getting pullbacks on the dollar right now, as well as on the VIX. Yeah, 22 quarter on the VIX. Yeah, if we look at the VIX over the last let's pull this up on a 15-minute. These red lines are where I got in and out of trades over the last few days that I'm removing. The blue lines are each individual day. You said 22 quarter. I want to say 22 half for me. And the real line the other day was 23. It made it right here. It pushed up, 23 held. It broke out above, and then immediately got rejected off of that 23 level. I mean, like false breakout to the upside and straight down. We're a good distance away from that right now. So my closer level is just really the highs from today. But I can see your 22 quarter. It's this support, then rejected off of there. So we'll see. Above 22 quarter and the dollar going up as well. leaving the demand that it just tapped, that I marked out. Just tapped and getting rejected off of there after a strong push. So if it wants to retrace all the way back up here to 108, the market is going to want to go down as well. But I think it's going to want to hang out till Powell speaks. I was flat yesterday. My trade was break even. I'm up 3R on the week here. Took a winner Monday, winner Tuesday. Did not trade on Wednesday. Break even yesterday. Love to finish the week off strong. It's a heck of a rejection candle on the hourly. At 10 a.m., this 4-hour candle is going to close as well. And so we wait. About a minute 30 in this first 15. Advanced declines are coming down. Tick chart's pretty flat. It spiked to a new low, but holding above the 0 line there. Did spike here to a new low, but holding steady. The only thing that's trending really is the advanced decline to the downside. Yeah. Yeah, I mean, the market already made its move, James, off of the 8:30 news. And so now it's just going to chop. It can't really move right now until Powell speaks. You can't be short, and then the Fed comes out dovish and this thing goes straight up and you can't go long, and the Fed comes out hawkish and this goes straight down. So, and that's essentially confirmed just by the very extreme low volume. Even the 2-minute, for me, the average to me is 15,000 and we're at not even 8,000. Probably mid 7. I mean, that's freaking trash. That is trash low volume. Even these were low days. This was decent volume up here, 18,000, 20,000. So even just the volume is saying sit and wait. Sit and wait. The only trade that I would have had to get in early would have been if this highs would have held. If this push down would have gotten rejected and this gave price action to go long, and really within the first like 10 minutes of the open broke out, pulled back, and therefore have 15-20 minutes in the trade before Powell speaks to try and at least scale out or hit target, or at least have had a good enough run to like put my stop at break even before the news. But that was going to be the only play. There's no way I was going to be able to take a short before the news on a breakdown and a pullback. So that was just going to mean this chalk crap. Choppy crap. So I'm actually going to turn off my camera and my mic for a few minutes. Go get a little stretch in, take a quick little walk, and come back ready. I'll be back with 5 minutes for news. I'm just going to take a quick little 5-minute break. All right, guys. Another push down into where the news took off from. Turn on PAL in the background.
Jackson may have discussed broad topics such as the ever-changing structure and the challenges of conducting monetary policy. Today, my remarks will be shorter, my focus narrower, and the message.
He's on.
The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy.
That's pretty hawkish already.
It does not work for me. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The burdens of high inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time. It requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is like...
Don't chase, guys. Don't chase. Stay patient. If this takes off, it'll give us a pullback eventually for an entry.
They will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. The U.S. economy is clearly slowing from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. While the latest economic data have been mixed, in my view, our economy continues to show strong underlying momentum. The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers. Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is going down. So, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
Hawkish. Very hawkish.
In July, FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the summary of economic projections range of estimates of where the federal funds rate is projected to settle in the long run. In current circumstances of inflation running far above 2%, the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target.
VIX smoked past 22.25. James, smoked past 22.50. It just broke 22.50. Dollar shot up. Retrace that move down.
Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June S&P showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections in September. Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century.
That isn't even. We're going way down.
In particular, we're drawing on three important lessons. The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bankers and others once needed convincing of these two things, but as former Chairman Emini has shown, both propositions were widely questioned during the Great Inflation era. Today, we regard these questions as settled. Our responsibility to deliver price stability is an condition. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on equity demand. None of this diminishes the Federal Reserve's responsibility to carry out our assigned tasks and achieve price stability. There is clearly a job to do in moderating demand to better align with supply. We're committed to doing that job. The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time. Today, by many measures, longer-term inflation expectations appear to remain well anchored. That's broadly true of surveys of households, businesses, and forecasters, and of market-based measures as well. But that is not grounds for complacency, with inflation having run well above our goal for some time. If the public expects that inflation will remain low and stable over time, then absent major shocks, it will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain. They built rapidly in wage and price stability. As former Chairman Paul Volcker put it in the height of the Great Inflation in 1979, inflation feeds in part on itself, so part of the job of returning to a more stable, productive economy must be to break the rapid inflation expectations. One useful insight into how actual inflation may affect expectations about its future path is based on the concept of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. When inflation is low and stable, they are freer to focus their attention elsewhere. Former Chairman Greenspan put it this way: for all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions. Of course, inflation has just about everyone's attention, which highlights a particular risk that the longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation are entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment helps bring down inflation, or likely to increase with employment as high inflation becomes more entrenched in wage and price. The successful vulgar disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that and what that means for us. So, these lessons are guidance as we use tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that the company becomes into better alignment with supply to keep inflation expectations. We will keep at it until we're done. Thank you.
I mean, that is their mandate. Their mandate is to control inflation, and their kind of one and only tool is interest rates. They've got a sledgehammer. They don't have a... They're certainly not using a screwdriver. Now, did the market price all that in already? And are we now going to the moon? Those are two pretty ridiculous 5-minute candles right there. It's quite the move down and quite the engulfing candle all the way back up. I will absolutely be waiting to see where this 15-minute candle closes to start with. I'm not even gonna rack my brain until then. Dollar pushing back down to new lows on the day. It's a sign of strength for the markets. All right, dollar back to new lows. See if the VIX continues to push back down, broke above the 250, but all the way back down. Certainly had the spike down on the tick charts on the news, but have now spiked to new highs as well. Pretty high extremes, pulled back to the zero line. Let's see if we start to pick a direction here on the internals. First signal, dollar short, is long for the market. Still got a minute 40 in this 15-minute. See if the tick charts hold above the zero line. See if the advanced declines, reverse trends, break the 21 EMA there. Weakest market is the Russell. Russell's below the overnight. Still holding below there. The rest of them are within the range. Or are we just going to chop the rest of the day? Let's see what we've done. On the ES, we've done 60 points with that breakdown. On PAL speaking, 63 is the ATR, so we've essentially used up a solid 95+% of the daily ATR. We've got the 15-minute candle close, new 5-minute. I don't have any clear signal yet from the internals. We're still trapped between these two support and resistance levels. We've got resistance, we've got support. I don't want to get short from down here with the support level here. Right, I want to see it pop up here, get rejected off of here so that I can get short from up here. And have decent profit potential. Or I want to see it reject off of this support level to try and get long. But we are going to stay patient. Stay patient, guys. Stay patient. All right, starting to see a breakdown back at the overnight, breaking through on the 5-minute. I don't really I don't have any trade set up for this right now. It's a pretty solid low on the tick charts. Not breaking to a new low, but it isn't an extreme low. Made an extreme low while Powell spoke. Be pretty difficult to break that low on the tick chart. So a pretty solid low on the tick chart. Advanced declines are trending down. Dollar is pushing back up. VIX pushing back up over 22 quarter that James mentioned. Minute left in this 5-minute. All 4 indexes are pushing down. Quite a bit of volume in that move down. Five minutes left in this 30. The ATR is massive right now. Yeah, I'm not taking a 14-point stop, that's for sure. Two to one, just above that low. I don't know if we're gonna get a pullback or not, but that's all I can stop at 92.25. Oof, stop way up there. Yeah, that's about as good as I can do. Looks like the Dow's the first one to break the low. Dow has already broken the low. How do we get in? How do we get in? Dollar's pushing, VIX is pushing. We do need a pullback. See you later. NQ broke, Russell broke, they're all broken now. Some serious volume in that candle as well. Difficult to stay patient, but that's what I gotta do. I will not be submitting this order. I'm going to need to wait for some price action on a pullback. Q stopping right at the lows from yesterday where price took off from. But continuing to push through. Continues to push through. See you later. Stay patient, guys. There will always be another trade. There will always be another trade. Now broken yesterday's lows. And I don't really have any great level here from Wednesday's garbage. Yeah, I hope no one's trying to catch this knife. Well, there's no doubt where this is going. VIX is well above 23 now. There's still 5 minutes left in this 15-minute candle. Good lord. pretty much all I'm going to have is some type of pullback into there. It's a gigantic zone, so I will not be taking that limit. We'll have to wait for some price action. And I do expect us today to close near the lows on the day. So I'm only going to want to be short. It's going to be very difficult for me to see the potential for a long, even at the lows. Even if it makes it all the way down to this lower level and bounces off. I see this closing more near these lows than anything, so what I need to see is a pullback to try and get short. And so with that, guys, I think I'm going to call it a morning. I'll have a recap later, especially if I get into a trade. No trades thus far. I didn't really have any setup up here to try and get into this short. And so no trade. No trade is better than a bad trade. I would have liked to have finished the week off strong with a nice trade. But we live to fight another day, so let's call it a morning. We'll see you guys next week, Monday morning, 9 a.m. Pre-market analysis, 9:25, we go live. We are trading futures live. We show you our winners. We show you our losers. And hopefully you guys get some something out of it. We provide some type of value for you. So thanks again. Have a great weekend. And we'll catch you on Monday. Take care.